Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Tuesday, April 24th, and we do got a few economic news releases scheduled for today. Yesterday was kind of an off day for economic news releases, so we'll jump right into it. We'll start off with the Case-Shiller Home Price Index. This is for February's numbers. So back in January, we had a negative 1% and drop. Basically, home prices dropped about 1%, and then and it came in February a negative 8.8%. So it dropped a little bit. So year over year came to about 3.5%. If you look at it, and Case-Shiller is like the 20 cities index over around the whole U.S. And the next item to note is the consumer confidence for April. This is kind of a big one to watch. We had a 69.5 for March. We figured kind of uptick, give a little uptick, but it has a slight downtick. So instead of going upwards, we had a downtick. So if you've been following me a little bit, we've been kind of saying we've been seeing some really good numbers first couple of months, and now we're starting to see kind of a slight taking a step back. So we don't know if this is temporary, if it's gonna start trend downwards again, or we're at. So we're going to watch over the next couple months as to if this is going to be a trend or if this is just kind of a little blip and we're going to head back up again. Next item note is the new home sales for March. We had 353,000 for February. They're estimating about 325,000 sales for March, and we actually had 328,000, so not bad. So we exceeded expectations a little bit. And then we also have the FHFA Home Price Index. This isn't as accurate of a index as the Case-Shiller, primarily because this one is basically only Fannie or Freddie Mac based loans. So basically when they're serviced to Fannie or Freddie Mac, they don't trace all loans. And there's a little bit more components in the Case-Shiller that creates less volatility. So this one doesn't really have the volatility, and it's not as probably as accurate as the Case-Shiller would be. So with that in mind, we have January, it was down negative 0.5%, and in February it went up 0.3%. So some decent numbers in that side of things. So let's go ahead and take a look here at the headline news. Stock market's up a bit. Dow's up over 100 points today, so that's kind of good news in that market. And today is the beginning of the two-day meetings for the Fed. FOMC meetings. Tomorrow will be the announcement, so that will create some volatility in the market. Typically, they hold that around 11:15, 11 o'clock a.m. on Pacific Coast Standard Time. So if you see some volatility after that time frame, you'll kind of know why. It's because people actually heard the Fed and are digesting the information. So even later on, it could, after they've digested some of the information, it could hit a little bit later on. So let's go ahead and take a look here at the bond market and see what interest rates are doing today. We started the morning up about 3 basis points, and right now we're closing the opening gap that was opened yesterday when we started up about 15, 17 basis points higher. So right now it looks like the gap is kind of closed, which is kind of good, but rates are crept up slightly today due to the close. But again, that could solidify the foundation for a further increase. So, all right, folks, you guys have a wonderful day, and we will touch again soon. Sorry for the phone there, but you guys have a wonderful day. I'll see you tomorrow.